Hello, I'm Lance Zimmerman with the CattleFax Closing Bell. Profit margins in the feedlot and packing segments have been a discussion point over the last few months. Fed cattle prices have been trading between $120 to $130 per hundredweight since last fall. Boxed beef prices have ranged from $180 to $195 per hundredweight during that time, and packers have been operating at a negative margin. Feedlots managed to receive a higher percentage of the wholesale beef dollar throughout this time. The October to March fed cattle price, minus the hide and offal value, is around 56% of boxed beef prices on a 5-year average. Since October of 2011, the fed cattle price has been more than 59% of wholesale beef prices. Packers have reduced weekly boxed beef production throughout most of 2012 in an effort to better manage seasonally tighter fed cattle supplies and support boxed beef prices into the spring. Boxed beef prices have improved more than $15 in the last month, and seasonally they should continue to improve going into April. Fed cattle prices have also increased during this time, but fed cattle marketings could become less current if reduced slaughter causes operators to feed cattle longer. This could place pressure on fed cattle prices longer term and allow packers to gain leverage from feedlots as supplies increase seasonally into the summer. This will be important for all cattle producers to watch over the next few months. Lower fed cattle prices this summer will challenge feedlot profitability going into the second half of 2012. Demand for feeder cattle and calves could weaken considerably if these feedlot losses become substantial. Fed cattle were quoted mostly $1 higher on a cash basis and $3 to $5 higher on a dressed basis. Trade volumes were moderate. Live sales in the north were collected at $130 to as much as $130.50 per hundredweight. Dressed trade occurred at $204 to $205. In the south, trade occurred at $130 per hundredweight as well. Feeder cattle values were $2 to $4 lower for the week, while calves were quoted in a full range of $5 lower to as much as $5 higher. Demand continues to be strong for all classes of replacement females, while slaughter cows were steady to $4 lower after considerably higher prices over the past few weeks. Boxed beef sold modestly higher for the week, and spot demand remains limited. Forward contract and formula sales are increasing, and March sales should see more volume. Corn prices edged higher this week on support from rising crude oil prices. Looking to next week, fed cattle supplies will continue to be seasonally smaller through early spring. Smaller supplies and a stronger beef complex will be supportive to fed cattle prices. Expect the market to trade steady to $1 per hundredweight higher on a live animal basis. Feedlot demand for feeder cattle and calves continues to be relatively strong, and tighter supplies going forward remain a concern. However, weakness was noted in the markets each of the last 2 weeks, so expect steady prices next week. Boxed beef prices are expected to move higher as well. Seasonally, the cutout should move higher into the spring as booking for grilling seasons becomes more common. However, increased production could place pressure on the market later in the week. The choice cutout is expected to trade in a range from $196 to $200 per hundredweight, with select boxes trading about $4 less. Spot corn prices have reached the upper end of their trading range, so expect prices to remain volatile through next week. Thanks for watching, and remember to visit CattleFax.com to become a member and receive the latest market news and analysis.
The beef business has never been for the faint of heart. For more than 40 years, CattleFax has led the way. We're the time-proven leader in research, analysis, and information, equipped with the industry's most powerful database. Become a member at CattleFax.com.